well the last 3 or 4 days. Solar industries, not exactly defense, but manufacturing of explosives for mining, that has not done too badly. We've seen Dynamatic Technologies the last few days doing extremely well for itself. BF Utilities hasn't done too badly. Bharat Forge, Ashok Atluri have had a bit of flavor to themselves as well. Zen Technologies, it's a mid-sized company. Citi, in its report, comprehensive report, I would add, on defense, mentioned about Zen Technologies as well. It's an interesting play. Not a very liquid stock, not very well discussed generally, but it's an interesting play. They are manufacturers of stimulators, so to say. They make stimulators for weapons, military aviation, and allied defense equipment as well. Key customers, of course, are the defense services and the state police forces. I think that's how they started off with the police forces. So let's talk about this whole defense focus of the new government and the impact that it can have on companies operating in the space that Zen Technologies is. Ashok Atluri, CMD of Zen Technologies, joins us right now on the show. Good to have you, Mr. Atluri. Thanks so much for joining in. That's my precise question. A lot of people don't know about Zen Tech. If you can, in a succinct manner, just quickly tell us, what is it that you do? What is it that you do? And how has business changed, if at all, in the last 6 months with the focus of the new government?
Oh, we are in the training simulator space. We make training simulators for defense, police, and paramilitary forces. And we have been doing this since 1993. For the past 2 decades, we are in this business. And it has been, for the past 9 months have been very different for us. We think that the move is in the right direction. There is a lot of encouragement. The government is pushing us to tell what we can do for them. The fear factor is gone. We are focusing on productivity. And I think everything is, the environment is extremely positive in a very brief manner.
So just going through your 9 months financials right now, Mr. Atluri, your top line is down 65% at 14 odd crore rupees. Bottom line is showing a loss right now of 15.3 odd crores. That means that the 9-month loss is exceeding, the top line for the fiscal thus far. What explains these kind of numbers? And more importantly, when do you hope to turn profitable?
If you look at last year's figures also, out of operational revenues of 46 crores, we made about 9 lakhs profit. But if you notice that there is a very key important part is that almost 20 crores have been spent on R&D. We are a very R&D focused company, and we have about 7 to 8 products in pipeline, which can be for the demand for which is running into thousands of crores. So we have been focused on developing the product. So if you take the R&D of almost 40%, even this year we are having significant R&D expenditure. And we made a press release in September of 2014 that we have got an order of almost 170, 180 crores. And those orders will be part of that, whatever the equipment orders were there, we would be executing in the next 2 to 3 quarters. So I think the revenue recognition will take place in this current and the next quarter, last quarter and the current quarter. So this loss would be wiped out. But the reality is that, the things are changing now. The government was very, very slow in the last 2 years. And there were very few, little action in the government in the last 2 years. But that thing is slowly changing, and we expect the government to move very fast. And as also in the press release, we said that we are in the pipeline of about 300 to 500 crores of decisions have to be taken by the government. If that happens, we expect this and the next year to be extremely good.
Okay, so correct me if I'm wrong, Mr. Atluri, but you are targeting a revenue of about 100 crores by FY17. Am I correct?
In fact, the FY16, FY17 will be a very, very big years for us. As I said, almost 300 to 500 crores of orders are in the pipeline in final stages, and we expect the results to come. And based on the outcome, the turnover may be much, much higher. Typically, we take about 2 to 3 quarters to execute any order that we get, because order execution is not a big challenge for us. So, if the orders come in the next 1 or 2 years, we will be executing it in the same year or next 2 to 3 quarters.
Okay, and this 300 to 500 crores as the case may be, what is the current order book compared to the kind of bids that you've put in already? What would your current order book number be?
The order book number would be minus the execution. It should be in the region of something like 80 to 90 crores. And most of them would comprise of services of annual maintenance contracts that we give to our customers after we supply the equipment.
What about the debt on books then? And are you open to acquisitions then to boost product placements as well as, enhance your business going forward?
Number one, the debt is, we don't have any debt. Debt that you see is mostly against the fixed deposits that the company has. So we have taken very little debt except to, for the working capital. The second thing is acquisition is not an option. The moment we get acquired by, if it's an Indian company, I think we will maintain our the edge that we have as an indigenous company. But so acquisition, if there is any collaboration, it has to be with an Indian company. The moment a foreign company comes, we will lose our character and all the advantages will disappear. So our focus is, who can we collaborate at an Indian level with a larger partner, and at a foreign level, we have to keep them at the 24 or 49 level percentage collaboration. So that is the collaboration opportunity that we have.
Are you in talks with any of the large Indian players?
No, none of them at all. No, not yet.
Okay. Mr. Atluri, just to give me a flavor of what's the kind of order bids that you've put in. I mean, are all of these in the simulators place where I believe you have some product patents as well, or the 300-500 crore that you put in are of a different nature?
So, we are in the, we try to think of ourselves as an R&D company. Out of 250 employees, almost 100 of our employees are in the R&D, do R&D. So we have filed for almost 60 plus patents, out of which we have 13 have granted, and national, international, all of them are there in that. So we do think that the orders that we have bid for are in the training simulator space. Yeah, that's right.
Okay. Now, my question is about the scope that you see for your business. If you're telling me that you've bid for orders worth 300-500 crores right now, when the defense is just opening up, what's the scope for your business? And are you the only player in the field that you're operating in, or are there other companies which are your key competitors? If you can give me some names out here.
Yeah, there are other companies which are there, and these bids that we are talking about are currently in process. But there are other upcoming tenders which are almost, which run into a few thousands of crores. But again, we have competition both at the domestic level for some of the simulators, and from some other simulators we have international competition. In international we have Saab, we compete with Cubic Systems, we compete with Rheinmetall, we compete with Thales. So all these companies are there that compete with us in the simulation field. So at the domestic level, Bharat Electronics has competed with us, and there are a few other Indian companies. But not for the complete range, but in one or two specific products, we do have competition. But we see most of the Indian competition is coming because they collaborate with some foreign company. There is very little indigenous development happening there. So they contribute their so-called 30%, and they try to get the foreigner with their 70%, and they bid against us. So that's the kind of competition we mostly have.
But would you say that you have the sizable share in the market of the products that you're talking about where you do have immense competition?
Yeah, I think, there is a kind of sense that, we should buy Indian, when especially, when you look at a defense product, and especially high technology product, the manufacturing component is only 20%. The intellectual capital content is, manufacturing is at 20 to 30, remaining 70 to 80% is intellectual IP content. So we are trying to capture the high value in this segment, and whenever somebody says that as offset they're giving manufacturing, you can never, you don't capture the real IP in that. You just do a pizza delivery boy's job of manufacturing, build to print kind of thing. They give some designs, you print it out, and you don't make any much money. I think a lot of money for the smarter companies, we think, including Zen Technologies, is in developing the complete product, ab initio, with their own IP, and then trying to capture as much value as possible.
Right. Just before we wrap up the discussion, Mr. Atluri, and interesting thoughts really out there from you on what's completely make in India versus what's being kind of collaborated with players outside India. But purely for Zen Tech as a company, I think you did mention that you will turn profitable with new orders or coming in for FY15 itself. But my question is more on the operational front. On the EBITDA front as well, do you reckon that you will turn profitable in FY15 because your R&D cost, you are an R&D centric company, and I believe the R&D cost would be high. Would you turn EBITDA positive in FY15 itself?
Yeah, the thing is, depending on the size of the order execution that we do in the FY15, we are hopeful that we'll turn positive. As we said in the September press release, that we will execute it. And once we cross our 50 crore limit, we start breaking even very typically around 50 crores. So 45 to 50 crores. So I think it should be profitable for us.
Okay, so you do mention that you will become EBITDA positive in FY15 itself. Good,
yeah,
good chatting with you, Mr. Atluri. Thanks so much for giving that perspective about Zen Technologies. Much talked about stock. A few people knew about it. Thanks so much for joining in today and speaking about this. Citi mentioned about Zen Tech in their report as well. The stock didn't do too well. It was not a recommendation, really more a mention of what the company does. But it's an interesting reaction to the stock today. And it's an interesting company as well. Simulators is what they manufacture. They are hopeful of being EBITDA positive in the current year. They've bid for sizable orders. 300 or 500 odd crores of orders that they've bid for. If those come in, then the revenue could go up to maybe 100 crores or more than that in the next couple of years as well. Currently, I believe it's about 50 or 60 odd crores. So do watch out for Zentech, 12% higher right now.
Well, that's a strong move on the stock in an otherwise very, very tempered market. I just want to see what Bajaj Auto as well is up to, considering the auto sales data is out. Their exports have fallen about 16% on a year-on-year basis. They stand at 98,700